Welcome back, my friends. Now that earnings season is basically wrapping up, we can all lift a glass to big tech. All of the big tech names had strong earnings, which might just be enough to head off a recession. In this video, we will do a quick review and roundup of recent tech earnings reports and the numbers that they reported. But before we get into all of that, I would like to thank everyone who views my videos. If you would like to support the channel, please see the link to Buy Me a Coffee in the video description below. And please hit the like button and leave me a comment below. I would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. First up is Amazon. Amazon reported better than expected earnings and revenue for the first quarter, driven by growth in advertising and cloud computing. The stock ticked higher in extended trading. Here's how the company did. 1. Earnings per share, 98 cents versus 83 cents expected by LSEG. 2. Revenue, $143.3 billion versus $142.5 billion expected by LSEG. Wall Street was also expecting at these key numbers. 1. Amazon Web Services, $25 billion versus $24.5 billion in revenue, according to StreetAccount. 2. Advertising, $11.8 billion versus $11.7 billion in revenue, according to StreetAccount. Operating income soared more than 200% in the period to $15.3 billion, far outpacing revenue growth. The latest sign that the company's cost-cutting measures and focus on efficiency is bolstering its bottom line. AWS accounted for 62% of total operating profit. Net income also more than tripled to $10.4 billion or 98 cents a share, from $317 billion or 31 cents a share a year ago. Sales increased 13%, from $127.4 billion a year earlier. Next up is Alphabet, parent company to Google. Alphabet shares shot up 10% after the company posted better than expected first quarter results and greenlit its first ever dividend and a $70 billion buyback. It's the sharpest rally for the stock since a 16% jump in July 2015. The shares closed the day at $171.95, valuing Alphabet at over $2.1 trillion. The company on Thursday reported revenue of $54 billion, a 15% increase from a year earlier and the fastest growth rate since early 2022, surpassing the $78.59 billion in sales expected by analysts polled by LSEG. Earnings of $1.89 per share eclipsed the $1.51 in earnings per share expected by Wall Street. Alphabet announced that its board authorized a dividend of 20 cents per share to be paid on June 17th to all shareholders of record as of June 10th and said it intends to pay future quarterly cash dividends. The company said the board also approved the repurchase of an additional $70 billion in stock. Next up is Microsoft. Microsoft shares rose as much as 5% in extended trading after the software maker issued fiscal third quarter results that outdid Wall Street's expectations. Here's how the company did in comparison with the consensus from LSEG. 1. Earnings per share, $2.94 versus $2.82 expected. 2. Revenue, $61.86 versus $60.80 billion expected. Microsoft's total revenue grew 17% year over year in the quarter, which ended on March 31st, according to a statement. Net income at $21.94 billion or $2.94 per share was up from $18.30 billion or $2.45 per share in the year-ago quarter. With respect to guidance, Microsoft's finance chief, Amy Hood, called for $64 billion in revenue for the fiscal fourth quarter, below the $64.5 billion LSEG consensus. Hood's forecast implies an operating margin of 42.3%, ahead of the StreetAccount consensus of 41.5%. Next up is Apple. Apple announced that its board had authorized $110 billion in share repurchases, a 22% increase over last year's $90 billion authorization. It's the largest buyback in history, ahead of Apple's previous repurchases, according to data from Barini Associates. However, overall sales fell 4%, and iPhone sales fell 10% year over year during the quarter, which Apple attributed to a tough comparison versus last year. Here's how Apple did versus LSEG consensus estimates in the quarter ended March 30th. 1. EPS, $1.53 versus $1.50 estimated. 2. Revenue, $90.75 billion versus $90.1 billion estimated. 3. iPhone revenue, $45.96 billion versus $4,600 billion estimated. 4. Mac revenue, $7.5 billion versus $686 billion estimated. 5. iPad revenue, $5.6 billion versus $591 billion estimated. 6. Other products revenue, $7.9 billion versus $808 billion estimated. 7. Services revenue, $23.9 billion versus $23.27 billion estimated. 8. Gross margin, 46.6% versus 46.6% estimated. Apple did not provide formal guidance, but Apple CEO Tim Cook told CNBC's Steve Kovach that overall sales would grow in the low single digits during the June quarter. Apple posted $81.8 billion in revenue during the year-ago June quarter, and LSEG analysts were looking for a forecast of $83.3 billion. Next up is Meta. Meta had better than expected first quarter results. Here are the key numbers. 1. Earnings per share. $4.71 per share versus $4.32 per share expected by LSE. 2. Revenue. $36.46 billion versus $36.16 billion expected by LSEG. Revenue increased 27% from $28.65 billion in the same period a year earlier, the fastest rate of expansion for any quarter since 2021. Net income more than doubled to $12.37 billion or $4.71 per share, from $5.71 billion or $2.20 per share a year ago. One reason for the pop in net income is that, while revenue growth accelerated, sales and marketing costs dropped 16% from the year earlier period. Meta said it expects sales in the second quarter of $36.5 billion to $39 billion. The midpoint of the range, $37.75 billion, would represent 18% year-over-year growth and is below analysts' average estimate of $38.3 billion. So overall, not bad for Q1. But what do you think? Please hit the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. And before we end, a word from the sponsor of this video. Today's sponsor is ProWorldNet.com. ProWorldNet.com is a job website specifically dedicated to licensed professions. Doctors, including any type of specialty, nurses, and that includes all grades of nurses, lawyers, regardless of area of legal focus, teachers and professors, from kindergarten through graduate school, as well as any kind of job that requires a government license or certification. And ProWorldNet.com also includes short-term gig-type jobs as well. So be sure to check out ProWorldNet.com if you are looking for a job or an employee. Thank you for watching.